This week, DBS Bank, the Singaporean multinational banking and financial services corporation that's headquartered in the Marina Bay Financial Center, is the largest of the three banks in Singapore. It was originally set up by the government of Singapore, and they updated their qualified customers on their website that they are offering trading in four fiats: the Singapore dollar, the US dollar, the Hong Kong dollar, and the Japanese yen, with the established cryptocurrencies, namely Bitcoin, Ethereum, Bitcoin Cash, Polkadot, and XRP. Clearly, this real world adoption of crypto assets puts Singapore in the lead globally, and the world is watching, especially since some of those most recent retail investor losses, well, on a large scale, were from entities based in Singapore. Yes, this did tarnish their reputation, and yes, we have a new narrative that is forming from the self-described hub of blockchain and digital assets in Asia. On the 29th of August, 2022, there was an opening address by Mr. Ravi Menon. He is the director of the Monetary Authority of Singapore, or MAS, and he had a new message. It was yes to digital asset innovation and no to crypto speculation. In brief, MAS is very supportive of the utility, but seeks to discourage and possibly even restrict speculation in crypto. Have a listen.
So today we'll try to do a better job of explaining the ecosystem and its different components, and what MAS is actively promoting, what MAS is discouraging, and what are the risks MAS is seeking to manage. The cryptocurrency world is borderless. With just a mobile phone, Singaporeans have access to any number of crypto exchanges in the world and can buy or sell any number of cryptocurrencies. The most promising use cases of digital assets in financial services are in cross-border payment and settlement, trade finance, and pre- and post-trade capital market activities. It is this crypto or digital asset ecosystem that supports use cases which can potentially facilitate more efficient transactions, enhance financial inclusion, and unlock economic value. This digital asset ecosystem is where MAS sees strong potential and is actively promoting. Now, a cryptocurrency is the digital asset issued by the distributed ledger protocol. It is often referred to as the distributed ledger's native currency, used as a medium of exchange and store of value within the network. For example, to pay transaction fees or incentivize users to keep the network secure. But cryptocurrencies have taken a life of their own outside the distributed ledger. And this is the source of the crypto world's problems. Cryptocurrencies are actively traded, that's okay, and heavily speculated upon, that's not okay, with prices that have nothing to do with their underlying economic value related to their use on the distributed ledger. The extreme price volatility of cryptocurrencies rules them out as a viable form of money or investment asset. It is this speculation in cryptocurrencies that MAS strongly discourages and seeks to restrict. Prices of cryptocurrencies are highly volatile, driven largely by speculation rather than any underlying economic fundamental. It is very risky for the public to put their monies in such cryptocurrencies, as the perceived valuation of these cryptocurrencies could plummet rapidly when sentiments shift. And we have seen this happen repeatedly. Since January this year, MAS has restricted digital asset players from promoting cryptocurrency services at public places. So this has led to the dismantling of Bitcoin ATMs and the removal of advertisements on cryptocurrencies in MRT stations. But despite these warnings and measures, surveys show that consumers are increasingly trading in cryptocurrencies. This appears to be a global phenomenon, not just in Singapore. Many consumers are still enticed by the prospect of sharp price increases in cryptocurrencies. They seem to be irrationally oblivious about the risks of cryptocurrency trading. Consumer-related risks have therefore gained the attention of regulators around the world. MAS is considering further measures to reduce consumer harm. Adding frictions to retail access to cryptocurrencies is an area we are contemplating. These may include customer suitability tests and restricting the use of leverage and credit facilities for cryptocurrency trading.
This may feel alarming, but in a country where 1 in 7 adults own some form of cryptocurrency, Bitcoin as the most popular at 66%, it is then followed by Ethereum at 52%, Cardano at 23%, Binance Coin at 17%, and Dogecoin at 11%. All well above the global average, according to Finder. And what's interesting too, 44.9% are female. Coinbase joined DBS on October 11th with their digital payment token license from MAS, a very difficult license to be granted. And CoinHako, an exchange which SBI is invested into, also received the DBT license. Despite being stung by the high-profile collapses, Forbes India published an article on October 25th that the high net worth individuals in Hong Kong and Singapore are eager to invest even in this bear market. This comes from a survey that KPMG did, and they said that over 90% of the family offices and high net worth individuals are looking to digital assets. In fact, most of the respondents that responded to their survey manage between 10 million and 500 million in their portfolios. So keep an eye on Singapore as they maneuver in this digital space. They are a country determined to lead, and up to now have a number of countries following their footsteps. Thank you for watching this Genfinity exclusive Market Asia video.